Hey traders, welcome back to another Sunday video getting ready for the week ahead. In these videos, what I like to do is talk about setups that I am currently looking at, trades that I'm currently in, and give a bit of a forecast or overview for the week coming ahead. These videos are quite popular on my channel, and if you enjoy them too, I want to ask just a quick favor. If you could hit the thumbs up button, subscribe to the channel if you're new. Let's go ahead and jump in and talk about some setups for this week. First off, I just want to start with the dollar index, which had a really incredible continuation move the last several days, following the election outcome as well as the hawkish remarks from Jerome Powell this past week. We really have seen the dollar index just kind of dominating everything else. In fact, it's pretty obvious if you just look at some of the other currencies, euro, pound, Kiwi, look at the CAD compared to the dollar, right? Everything seems to be sort of bowing down right now to this dollar strength. And the question is, how much longer can this continue? And maybe a better question is, if it continues, what does that do to the rest of the market? Because of course, gold is sensitive to what the dollar is doing. The stock market is sensitive to what the dollar is doing. And I want to get into that today because the dollar really holds sort of the key to our analysis here this week. What I think is very interesting is zooming way out here on the daily chart. You can see that we had key levels of resistance come into play around this 106.5 area. That seemed to be the point where dollar bulls were sort of backing down and basically sort of yielding. That being said, there's one additional key level that we've actually made our way up to, all the way up here around 107. Now, this 107 level is psychologically a really big one because as we come into, we really zoom out here, when we saw the inflation, fears running crazy for the U.S., we saw the dollar get up to as high as, 114 area. That being said, I think that as we come up into this current level of resistance, I think there's a good chance that we do see a bit of a pushback, right? We've had just a straight shot to the upside here on the dollar. It's been a very continued run to one direction. I think the market naturally, moves in waves. And so I wouldn't be surprised if after this ginormous push up coming into a very long-term key level of resistance on the weekly chart, that we do see a bit of give back on the dollar index. I would not be surprised to see that. However, in order for us to see a substantial move lower, meaning an actual continuation to the downside, we need to see some of this strong economic data cool off a little bit. And I want to get into that because these are some things that we really need to keep an eye on. Specifically last week, if we take a look at some of the data that came out, we saw retail sales came out better than expected, which showed the consumers in a pretty decent spot compared to what forecasts were. Remember, retail sales just gives us the volume, the buying and selling activity on the consumer level. And if that's higher than expected, that shows, consumers are out there spending money. They're feeling a little bit better. We've also seen inflation, while it has, come down a lot. Recently, we did get that little uptick here in CPI this past week. So not a huge jump though. And you can see relative to forecast, inflation just came in line with expectations. But we do want to keep an eye on this, right? When we watch inflation, right now, the stock market's had a really good period. And I think it's largely because you've had this fall in inflation and the expectations that the Fed is going to persist in cutting rates, even if it's slower. And that brings me to why the dollar index was so strong this past week, as well as why the stock market, I think, took a little bit of a tumble. It was comments from Jerome Powell who sort of reassured us, or not reassured us, but actually reconfirmed this theory that the bond market seems to be putting up there. The reason the dollar index is up is because yields are up. Yields are up because the bond market sort of thinks, hey, the U.S. economy seems decently strong. Inflation might not be going anywhere. And under Trump, there's the possibility of tariffs, which could reintroduce some inflation. So all of that said, the bond market seems to be saying, okay, we're not really going to see a whole bunch of rate cuts from here. And so the stock market sort of tumbled a little bit. Now, I was long the NASDAQ and ended up taking profits on Friday because we broke this level of support And that was my trigger, by the way, just to take profits on this move. So I took profits on my NASDAQ position. I am still looking for opportunities to get long the NASDAQ, but just going to wait and see here since we got, again, some selling there. I also wanted to bring up here something on the top setups algorithm, which is the scoring system that I use to find technical and fundamental setups in the market. So if I go here and I just say, I'm going to just take out the neutral readings here, you'll see there's no longer a reading for the NASDAQ because it is sort of fallen into neutral territory at this time. So the S&P 500 is only a +2. If we take a look at, where's the NASDAQ on this list? NASDAQ's down here at -3, so really not loving the setup here for the indices at this moment quite nearly as much. But if we go back to this list of items that look not neutral, right, something actually bullish or bearish, we've got an interesting list here. A lot of currencies, get the Nikkei, the DAX, the Euro Kiwi, Euro CAD, Euro Yen, Kiwi Yen, NZD CHF, USD ZAR. So sort of a light watch list here, but these things can flip into, bullish, bearish pretty quick at a moment's notice. So I'll keep an eye on this one to see if we can get some more interesting setups. I also do want to mention, of course, the COT data here was another reason why there were some things that were not particularly interesting here to me. For example, they sold the NASDAQ, right? So let's take a look at some institutional activity here really quick. And when I say that, I know that sounds sort of like, oh, institutional activity, how fancy. But really what I'm doing here is I'm just tracking the CFTC's weekly reported commitment of traders report. This allows us to watch institutional money flows on a weekly basis. It is not minute-to-minute updates on what institutional money is doing. However, it gives us a great idea, in my opinion, of what institutional money flows are looking like. Which direction are they trading? Are they buying the NASDAQ? Are they selling gold? Are they buying Bitcoin? Well, I want to show you some interesting stuff here. So if we take a look at the NASDAQ, what you can see is that the change in long contracts week over week, they added 8,200 long contracts, but they also added short contracts to the NASDAQ. And on a proportional basis, this was a bigger add of shorts since the previous, the number of short contracts open, right, versus number of long contracts. They were more oriented long. They've now shifted slightly and become more neutral. I know it's a little bit complex, but think about it this way. If big money has a big long position and a big and a smaller short position, and they add equally to both, that proportionally is actually more of a bearish move than a bullish one. So kind of, getting into the nitty-gritty specifics here, but also let's take a look at gold. This one is more clear, more obvious. What we can see here is that the number of long contracts, they closed a substantial number of long contracts, 20,591. And there is a multiplier on this. There's like each one of these is not one contract in the futures market. It's like 1 times either 100 or 1,000. Yeah, I forget which one it is for gold. But number of short contracts traded, they closed some shorts, but mostly some bearish activity here, closing a lot of long positions. So I like to keep an eye on this because especially if you have something in mind that you really trade heavily, like a lot of traders watch gold, they love to be able to check this. And check this out. The COT data history tab is one of already our most popular new tools that we've just recently added. A lot of people have been asking about it, and we finally did get it made. So what this allows you to see is, check this out. We've got the over time long versus short ratio here by institutional money. And we can actually see, interestingly, guys, that gold in recent weeks has actually been seeing a bit of a institutional ownership decline. I find that to be really interesting, and I want to keep an eye on institutional money flow week to week. So we built this COT data history tab. By the way, if you're an EdgeFinder user, this is not a paid upgrade or anything. You get this completely free added to your EdgeFinder. Just check your portal. So if you have the EdgeFinder already, check out your new COT data history tab. You can select any symbol you want, and you can track the historical institutional money flows. Absolutely awesome. We're super excited to have added this. And I should also mention that if you are not already taking advantage of the EdgeFinder and all of its tools, now is literally the best time of the year. And I know that I throw you guys, a pitch every once in a while here on my videos, but I just want to be very transparent with you. Every year we do a Black Friday sale, and it is our best opportunity of the entire year to pick up a copy of the EdgeFinder. We work on these things night and day. We're a software company in Atlanta, Georgia. If you like the tools that I'm using in my videos, if you are serious about fundamental analysis, if you think you want to upgrade your toolkit in trying to become a better fundamental analyst, the Edge Finder, in my genuine opinion, even if I didn't own it and sell it myself, would be worth the money. It is a remarkable tool that brings all the data together. And you know how I know that I would buy it? Because I paid for all of this stuff to get developed. First and foremost, because it was a tool that I wanted to use myself and now sell as a business. So it is a remarkable tool. It has so many different features. You've got seasonality scanners, economic data scanners, right? Labor data, inflation data, economic data, like GDP growth, PMI data. So all of this in one place is the idea. You can use one single portal for your fundamentals, and of course use your technicals, MetaTrader or NinjaTrader or CTrader or TradingView for your charting. But then you can use the Edge Finder to help you spot some market trends and ideas on the fundamental analysis side. So again, pick up your copy. That is the biggest discount that we do all year long. And also, if you'd like to join the Discord, look at that fancy look I've got on my face, right? If you want to come join the Discord, you can also see the trades that I take, and you can bundle both of them for our Black Friday sale at checkout. Just use the promo code and link that are in the description of the video down below. If you click that link, use promo code YTVIP. That is basically YouTube VIP membership discounts. So if you are a member or not a member, a subscriber here, I really appreciate you watching my videos. Take that code with you. It'll get you up to 40% off the tool. Okay, yeah, COT data history is very exciting. I also wanted to take a quick look at the put-call ratio. This is one of my favorite indicators on the Edge Finder. I think it's not as popular for, some people like it, some people don't care so much for it, but I think once you understand what the put-call ratio actually is telling you, it's fascinating. So the put-call ratio is showing you the number of puts traded versus the number of calls traded on the options market this is specifically for the S&P. So when we see this thing spike up, that's telling you that lots and lots of puts are being traded, bought, right? People want to buy puts as protection to their accounts, or they're bearish, etc. We saw this get crazy upside right before the election. And then following the election, it dropped very hard as there was a decisive winner, and the market sort of celebrated that uncertainty becoming known and not having to worry about who the president is going to be or not having a peaceful pass of power. All that combined sort of dropped the put-call ratio, and now I think we're back trading towards the middle ground. This actually is okay when we're trading towards the center. It is a bit of a more neutral reading. When this thing gets extreme, as you can see here, it actually forecasted very well for the indices, a bit of a topping point, and forecasted very well a bottoming point November 5th. So again, if we go to November 5th, that's right here, right? Put-call ratio went crazy, and then the market actually jumped. Put-call ratio went crazy the other side, market dropped. So I keep an eye on the put-call ratio very frequently. It's great if you're an index trader to have that on your watch list. So yeah. Anyways, for me with the NASDAQ, am I jumping right back in? Not necessarily. I wouldn't mind waiting to see if we can get a bigger pullback here. We've had a really great run in recent months. We do have Nvidia earnings this week, which has the potential to really help or really hurt this market, right? Nvidia is a very key stock. It's one that I own. I own shares in Nvidia. I'd love to see this thing continue to trend to the upside. However, the expectations for this stock are very, very high. We get earnings for Nvidia, which will be a catalyst for stock market indices on Wednesday after the bell. So yeah, we'll see. S&P 500 also coming back into a level of support. We'll see how this level reacts. Can we hold support? Again, I'm going to pause on jumping into more longs at this time. I'm just going to wait for the Edge Finder to give me that confirmation again. But looking really overall like a very strong upward trend. And I wouldn't mind if this thing pulls back a little bit more. I'd love it, actually. It would give me a much better chance to get a nice entry on the long side if I can get it. So waiting and trying to be patient enough to wait for that setup. Let's talk gold here for just a second. So gold has really struggled, right? It was in this unbeatable upward trend, and I showed you that COT data just a moment ago where we saw institutional money sort of net, well, not net selling, but a little bit of a bearish recent couple weeks. Well, you can actually see that also playing out in the gold market. We see big money sort of exiting the long position a little bit. It doesn't mean that they're massively turning short on the gold market, but where there was just sort of a continuous institutional buying trend going on in gold, which I think is fascinating, by the way. I want to show you this again. Let's go back to this chart for a moment. COT data history. We're on gold. I want to point something out to you. This is October of 2023. And if we go to October of 2023 on gold, you can see that that would put us right around here. Look at this. This is crazy. Over here, keep an eye on that. Look at what gold did. It had a massive, massive rally. Let's go look at what institutional money did from October 2023 until now. Okay, we got that data right here. And oh, look at this. Institutional money persistently accumulated gold. They bought and they bought and they bought. Sometimes retail traders get the idea that big money is shorting on the way up and buying on the way down. And I actually think you might be surprised to find that that is persistently not the case. When you look at the COT data, big money seems to actually be trend following quite a lot. Check this out. Before, if we go to June, July of last year, 2023, let's look at what gold was doing then. June, July is, right here. June, July, they were actually selling gold, right? Selling, and then they turned around, started getting long, right? So tracking institutional money is fascinating because you can almost put a bit of a trend line like we've done here and track the overall directional flow of institutional money. Actually, you can even filter, you can look at just a specific region, and then this table down here populates for you. So you can see long contracts, short contracts, what they're doing each week. This is a weekly reported thing. And again, all of this, if you already have the Edge Finder, is completely free to you. It is a free update that has just been added to the tool. Really interesting stuff. When we take a look at, let's look at some other things. Bitcoin here. Bitcoin, I had a long position back, or I still do have a long position on Bitcoin. And to go with this, someone asked me a great question. They said, Nick, you went long Bitcoin. Edgefinder had a positive signal on Bitcoin at that time, but no longer does. It has a neutral reading now. Do you just close your trade? And the answer is no. What I do is if I see an Edgefinder setup, if we go to our top setups indicator here, and it's on the list and I like the setup, the technical setup looks good, I decide I want to take a trade, right? Which I did here. I liked the momentum. I thought we had the potential to continue, and it was looking like at the time Donald Trump was going to win the presidency, which has a big impact on Bitcoin because Donald Trump, his administration seems to be a bit more favorable to Bitcoin. Obviously, it's jumped like what 35-40% here in the last few weeks. Anyways, I started seeing that setup, and I put a stop below. I actually, full transparency, I took an attempt right here to get long Bitcoin, and I got stopped out there, and then decided to re-enter the trade right here. And that ended up being, honestly, one of the best trading decisions that I've made this year. The Edge Finder was giving me a positive signal, and I went ahead and found the technical setup that I liked in the lower time frames, the 4-hour chart, and boom, took the trade, and this thing just took off. That being said, my approach in this scenario is to trail stops. So I had my initial trade here, I trailed my stops up here, and I trailed my stops, right? And then now what I'm looking for is if we can take out these highs, I'm going to just kind of continue to do so. Trail stops, tighten the stop until the market fully, shows real strong signs of reversal, and then I'll take a profit through my trailing stop method. So once I'm in a position, I just use a trailing stop method using price action. This is not a mechanical trailing stop. It is a discretionary trailing stop. What that means is I'm looking for higher lows to trail a stop behind, and just use price action to guide me where it seems best to put a stop. So that's where I'm at with Bitcoin. I really like the upside here. I did a webinar last week or yesterday, this weekend, for 8cap. It was the Trader Fest thing. It's actually recorded on my YouTube live stream recordings. If you go to my live stream section, you can go watch it back. But I discussed Bitcoin with a panel and how Bitcoin right now is actually one of my favorite long ideas for next year, which is high risk, high reward. And I'm not here telling you to go buy Bitcoin, but right now what I see is a risk on environment that has a lot of potential to continue for a while, and typically does continue a lot longer than people expect it to, right? When the stock market rips, people always say, you know, oh, it's going to crash. And usually, well, you will be right eventually, right? If you say that the stock market is going to crash long enough, then it will eventually crash, right? If you had said that before 2022, you said stock market's going to crash, stock market's going to crash, stock market's going to crash. Eventually, it did have a big sell-off, you know, a big corrective period that was, you know, a multiple year period. Look at this. It took you to get back to break even 752 days. That would be, by most people's standards, a pretty, you know, long duration, you know, correction. It's pretty standard in U.S. history. However, in recent history, that's been a big sell-off. So when we look at the stock market, and you know, you can say, oh, it's going to crash, it's going to crash. Well, a lot of times the average, actually, I heard this stat, the average bull market is 5.3 years long. The bull market here in the United States for the U.S. stock market is about 2 years old right now. What quantifies a bull market? I believe what they do is a 20% correction is considered a full-on bear market. So the bear market started over here, right? And then a 20% bounce back starting right here is a bull market starting, right? So we've been in a bull market since this period, and now we're going into the end of 2024. So, you know, my point here depends on which criteria you want to call the start of the bull market. But my point is, this thing has, in my opinion, room to run. That being said, 2025, I'm not thinking that the stock market has another up 20% year. I would love to see it, but I don't think we're going to see, you know, we've seen a 20% up year in 2023, a 20% up year in 2024. We're asking for a lot if we think we're going to get a third year 20% up. The average long-term historical performance of the stock market in the US is like 7 to 8%. So I actually think we're probably going to see a little bit closer to that. However, that doesn't mean that certain areas of the market couldn't do better. I do think that Bitcoin will be volatile, to say the least, but likely to do just fine. I also like certain sectors that we can get into in other videos because I'm running short on time here. But you, again, if you'd like to keep up with all the trades and all the ideas that I am personally taking in the market, you can see all of those in our Discord channel. Let me show you this really quick. So all of my trades get shared here for our members. You can see this is our index trades, commodity trades, Forex trades, everything that I'm trading gets shared with members in the group. So if you're not already in there and you would like to get access, again, everything is currently 40% off for our Black Friday sale. Don't miss it. It is the lowest prices that we do all year long. So in December, if you're like, oh, you know what, I actually am going to join it, just don't do that because then you'll miss the sale. So just check it out for yourself. There's information for you to consider down below in the description. There's also great brokerages if you're looking for some brokers to sign up with that give you special sign up perks. Even if you're not interested in purchasing anything, a great way to support my channel and also get yourself some great free perks would be to go shopping with the links in the description down below for some great brokerages. They are all regulated ones. There's some for US traders. There's some for international traders. Wherever you are in the world, check out those brokers in the description if you'd like to support my channel. They are affiliate links, and they definitely support what we do here on the YouTube channel for free. Thank you very much for watching. Have a great week ahead, guys.